Good morning or afternoon, wherever you are at. Can everybody hear me okay? If you can hear me, give me a 1 if you would, or a yes, whatever it takes, so I know that we're good to go. Just want to make sure that everybody can hear me. I'm getting things situated real quick. And there we go. We are going to have a little fun today. We are going to try something new. Hopefully this thing doesn't give me any hiccups too bad. I'm trying to get the video going. Let me get all this, see if we can get this going, get that stuff out of my eye. There we go. Y'all see me okay? Welcome out to another Trading Coaches Playbook. We are going to have some fun and hopefully everything works out technically the way we want it to. So let me get, before we jump to that, let's get to the disclaimer and get that knocked out and out of the way. We're not registered broker-dealers, investment advisors. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If we do talk about or mention a trade or say anything about specifically about a trade, just assume that it is a paper or a practice trade. For regulatory reasons, we do not discuss funded trading here. So here's what will happen. In fact, let me grab that real quick. I don't know how many of you have heard of Benson, but it's a streaming financial news network, basically. And I've been on for the last 2 or 3 months. I do about a 30-minute show with one of the hosts on there. And I was supposed to be on right after this web shop, but he needed to shift some things around and go at 12:15 today. So trying to figure out technically if we can make it work. I think we can. What happens is that streams on YouTube. So what I'm going to do, I think I can do this, is there is a link. I'm hoping that it will just work fine here and we'll mesh together and you can see everything inside of Zoom the way we're doing it here. But I'm also going to drop in the link for the YouTube, the streaming in there. So if we have an issue with Zoom here, the way the meeting's working, the way we're doing it, then the link's in there. I just dropped it in there. So that is to stream it. It's about a 30-minute show. So I'll be on there with Spencer and basically going through patterns and stuff like that. That's kind of basically what I do there. So so it shall be interesting because we don't know. Sean, our tech gentleman, we talked about it, tried to figure out, is there going to be a conflict? They use a different platform than we do. So, oh, thank you. So I don't think there's going to be a conflict, but we'll have to wait and see. So it's one of those things. It'll be an interesting challenge. So there we go. I got to resend. I'm sending the link. I didn't send it to everybody. Everyone. There we go. So that's there just in case you need it. Like I said, hopefully everything will work fine and mesh the way we're doing it here. But if not, then click on that and that will take you right over to there. And when it's time, we got about 10 more minutes before that. But I will have to, I have to log in about 5 minutes early just to get in back in the green room. It's interesting. So bear with me today. It's going to be, we are, I don't know how this is going to work. This thing's already slowing down on me. I don't know what's happening exactly and why. My machine slowed down a little bit, and I think that was it. Too much stuff running. So what I'm going to do is I'm going to try really quick to cover. I think we can cover most of the material that I intended to do in the next 5 or 10 minutes. Maybe not. That's a little push, but I'll go through this real quickly. This is the upcoming events. Mastering the Trade is the 22nd at 8. Trading You twice a month is coming up November 29th and then December 6th. And then Patterns and Flash with yours truly will be December 8th. That is 3 weeks out, huh? So yeah, we got a little bit longer gap than normal between classes, but if you haven't experienced Patterns and Flash, then jump in there and come join me there. You got Monster Market Movers December 15th. And then of course, Mastermind Group every Tuesday. The free online workshops, Power Hour with Rob, and then Trading Coaches Playbook, what we're doing now every Friday, and then Covered Calls Uncovered. And the Power Option Plays, as you know, Tuesday and Saturday. And then Covered Call Explorers also comes out on Saturday. we should add pattern of the week there, but the thank you, Amy. Did I do that wrong? Probably. I'm not used to using I can use the Zoom thing for what I need. That's about it. And then E-Mini Think Tank with Brandon is Monday, Wednesday, and Thursday. So that's all the upcoming events. And of course, you can find Wealth Builders HQ on all the different social medias. And Brandon's got this new class, XPS Cash Flow Secrets. So talking about cutting your time down to trading. So go check that out. At first, when I saw that, I thought the green was money inside of his jacket, but I noticed it's flowers. So he's got a good class coming out there. So what we're going to talk about for the next few minutes while we can is probability. And some of you have seen this, some of you have not. If we get cut short, we'll come back to it once I'm done with the Benzinga segment there. So, but probability is very, very important. It is not just from a statistical standpoint, but from a mindset standpoint. Learning to manage your emotions is very important. Managing and controlling your emotions when it comes to trading is very, very important. And if you shift into a mindset of probability, you're thinking in terms of odds, it has a dramatic effect on your emotional state, your mental well-being, right? It reduces anxiety, if you will. So there's a big question is what happens if you don't have to be right more than half of your trades? Because I know when I started, I thought, well, if I can just read the charts good enough to get right 70, 80% of the time, I'll make a fortune. And I've heard many people over the years, because I asked this question, what if you didn't have to, what if you were right less than half the time? People say, well, you'd be losing money. And I'm going to show you. But the beauty is that you don't have to be. And I used to think I had to be right more than 50% of the time. But what happens if you make $10 on one trade and you lose $1 on 4 other trades? You're doing okay, right? So risk reward, most of you I'm sure are familiar with this, so I will buzz through this very quickly. Essentially, if we're going to put $10 into a trade and we're going to stop out at 9, we've got a potential risk of $1, correct? Same $10 investment, same trade, target of 13. We now have got a profit potential of $3. We call that a 3-to-1 risk reward ratio. I know it's backwards, right? I can't remember who that was, but shouldn't it be 1 to 3? Yeah, I know it's a little wonky. This is what it's always been done. So I'm just, there's some things I just go with the flow with. Other things, it's like, no, I'm going to go a different route. But so let me show you very quickly. This is one of those things that if you haven't seen this before, then you may have your mind blown. So basically what we're going to do here is look at a series of 17 trades where we're either making $3 or we're losing $1 on the trade. So we have $3 of potential profit, $1 of risk. So the first trade you do, number one, you take a $1 hit on, you lose money on, you get stopped out, you take a $1 hit, you're down a net $1 and you're 0 for 1, you're negative 100%, right? Your second trade you do, same result. You get stopped out for $1 loss, you're now down a net $2 and you're still 0 for 2. You're 100% negative. You've lost on every single trade you've done. Then trade number 3 comes along and woo, this one works out. Goes and hits your target of $3. You make $3 profit. And now your net profit is where? You're up $1, yet your batting average is only 33%. You're less than half. You're less than 50% right and profitable. Then trade number 4 comes along. You lose $1, but now you're back to break even, right? You notice this, you got 1 profit, 3 losses, 25%. You're 1 for 4 and you haven't lost any money. 25%. Trade 5 and 6 do the same thing. You just lost 3 in a row. But then trade number 7 comes around and you make a profit. You got a $3 profit on that one. So it puts you a net $1 in the green, in the black. And yet what's your batting average? 20.5. You're 28.5% accurate and still profitable. It's a little mind-boggling, isn't it? If you haven't seen this, it is definitely definitely crazy to think about. Now, here's the benefits that come out of it. Let me get that. I'm getting logged in here. Yeah, that's a problem. That's what we figure we run into. Bear with me just a second. I'm trying to get logged in for the other thing, and it is giving me a, oh, hold on. I'm going to shut this camera off here, see if that will allow me to go there. Okay, good. That did. Okay. So the camera is off there. If you want to see me, if you want to see my face, then click on the link for Benzinga. It is okay. My mic's working and the camera's working over there. So the camera won't work with Zoom and Benzinga. So hopefully they have me muted. I'm got to see if I can figure out how to mute that over there. Bear with me a sec. I don't know how to. I'm not sure how to quiet that down over there. I don't know if I can. We might have to just work through it. Can y'all hear that real bad or not? I don't know if there's a way. I told you we'd have challenges today, and this is one of them. So you can't hear that? Okay, good. I didn't know if it's coming through my mic. So just about 3 minutes. I've got to be ready basically just to hop on whenever they jump on with me. So, and maybe we should, any questions real quick while we're waiting? I think it might be easier just to do that. It's a little hard to talk while these guys are chatting, but at the same time, it's, we'll see. So, okay, let's, Barry, percent profit is not correct after 7.
$26, but we got up to $24 at the beginning of September, came all the way down to around 15, so the stock dropped nearly 50%, and now it's coming back up. So I'm watching Tattoo Chef. You know, I know you shop at Costco, you see the products there.
Hover over the bottom. Are you talking about StreamYard, Amy? Because that's their thing that's going. So if we're 2 out of 7, Barry, I'm just curious. Yeah, it depends on how you do the math, Barry. Barry's saying the percent of profit is not correct after 7. If you're looking at the profit numbers, I'm looking at the number of trades that are profitable. So you've been profitable on 2 trades, you've lost on 5. So 2 out of 7, 2 divided by 7 is 28.5. So 2 profitable trades out of 7 trades is 20.5%. So out of the number of trades you've done, 28.5% have been profitable. Does that make sense? So yeah, that's where it gets accounting. And you're the engineer, I think, right? If I remember right. So you know, there's lots of different ways to slice it. So. Oh yeah, Amy. So I'm in there backstage, right? I'm in there back in their green room. So I'm sitting waiting for them to throw me up and tell me I'm on. So yeah, okay, yeah. Tim saw that too. Yeah. So, but yeah, this is, if you haven't seen this before, it's mind-boggling. Because when you think about, and yeah, this is a this is a first. It's definitely challenging. You all can't hear that, huh? That's interesting because it's not super loud, but I can hear it on my side. So bear with me just a sec. They're going to probably pop me on real quick here in a minute. So I don't want to get necessarily started with this. So you can hear it. Okay. Brenda can't. Okay. Well, because they use a different platform than we do, but they've got a full studio. I mean, there's gentlemen. So it's a streaming TV service, basically streaming financial network. So if you haven't heard of it, it's Benzinga. If you came in late, I'm going to be on that. I usually do about 30 minutes on there. We might spend the whole 45. I don't know. We'll see. Sometimes we go a little late. Sometimes they don't. So if you don't have a link in the chat box, there's a link to the YouTube. So if it doesn't come through here on what we're doing, they'll be able to see my second screen. I'll share it with them, the one that you guys can see. So you'll be able to see what I'm doing and hear me like we are now. We should be able to. So. Sorry, this is definitely interesting to me. It's not, I know this is a first for all of us. I think. I don't think anybody else has done this. It was just one of those things that Looking for my water. So, oh, you can barely hear it. Yeah, and I don't know. There's no way to mute it from my side. So otherwise, I'd mute it and wait for him. But then there we go. Hey, Spencer, how you doing?
Doing well, doing well. How's your week going?
Pretty good. How about you?
Good. Go ahead and share your screen for us.
Yep.
Is Alibaba one on your radar or not really?
Not right now. I know it was. Let me get rid of that real quick.
Money says it's not Alibaba, it's China. Yes, obviously, but look at JD.
Turn that up a little.
JD's in an uptrend, so it's
Hopefully.
not all China.
So we looking at Baba?
Okay, we got some charts up on the screen. I see them. Well, okay. What is this now?
Well, did you? I thought you wanted to look at Baba. You want to look at Baba?
Yeah, let's look at Baba.
Let's look at Baba. Do some analysis on Baba. BABA. Let's get wild and crazy, right? Well, there's the old support lines there. The next level is about 130 if it drops. Where's it at today?
It's right at that 140 level right now. The last time we bounced, it got a little bit lower, around 139, 138.63, I think exactly. So yeah, that's what I'm looking at right now, is seeing will that the level that we bounced off of last time, will that act as a support this time around? Because where you had those lines drawn up were at previous support levels, which we can certainly drop to. But I'm waiting to see if maybe we can't get a bounce off the same level we did last time.
Right there, about 140.
Yeah.
Yeah, there's definitely a little bit of support there. It's not super strong. So if there were a lot more hits on it, and obviously that's what you're looking for, right? With a support level is the more hits and the more time it's been there, the better the support level. So not a whole lot right there, about 144. So it's I wouldn't get super excited about it myself, but that's me. So you're looking for it to bounce though.
What does get you excited right now?
Good question. Let's go see. I've got quite a few. Let me just bring up these charts. The Omega charts is always easier. I've used this for 20 years, so I'm a lot more familiar with it than the others. But Alcoa is one that is still in a head and shoulders pattern, which we've seen for a couple weeks. So, and I love the looks of this. We've got two left shoulders, a big head, and then a right shoulder. It's got another right shoulder form since we first saw it. So the neckline there is about 45.60. So if it breaks there, we're looking at the potential for a drop to about 30.35. So this is about as beautiful and about as textbook as it gets when it comes to the head and shoulders. As you know, is my favorite pattern, right? We talked about that it was 2 weeks ago, I guess. So, yeah. Yes, exactly. Rinse and repeat. That's the beauty of patterns. They're consistent and they always stay the same. No matter what the companies do, no matter what else happens, patterns are always going to be the same. So that's the beauty of them. But ABBV, go ahead.
We've got to set up. So I'm sorry, that was Alcoa. We've got to set up there. What is this now? This is ABEV?
Yeah, AbbVie. It's a drug company. I can't remember exactly what they do. There's something, I think it's a biopharma or pharmaceutical.
Oh, wait a minute. That's ABBV. I misread that. That's
Yeah.
Okay, I got you.
Yeah. Nice little flag pattern. So we're looking for this to break to the upside if it takes off. Actually, you know what? I'm going to go. I have all these in my toss. Let me get that up. It'll be easier. Then we can see what's happening right now. ABBV. Where'd it go? How come this thing is not linked? What is going on here? Bear with me just a sec. I don't know why this thing's not linked. I don't know what's going on. It was working just a little bit ago. I don't know. Yeah, that is weird.
It's kind of weird weird technology week. We've been having some technology issues on our end as well. It's been a weird technology week.
Yeah, I don't know what's happening. That is really super weird. Because it's
Like
working.
the tech team is in Ann Arbor. You want us to head over there and knock on
Yeah, I'll just stick with this then. If that's going to be a problem, I'm not going to worry about that if we can't get it to work. So, because I know there's a couple of ones on here that were looking really good. A couple of them are already broken out, but ABBV just looking for it to continue this move. Except we got that headwind there at 119, which may be a problem. So we'll see if it breaks above there. And obviously, it's the earning news that popped it and made that flagpole. So you're all familiar with flags, right?
Yep.
Okay.
Well, explain. I mean, maybe, but explain it to some people that aren't.
Those that may not be. Okay. That's what I was curious of. So basically, it's like a flagpole, right? The pennant's the same thing. Flags and pennants are very similar. You got a huge move to the upside, huge momentum. And then basically it's just a resting period that forms in a little like a flag or a pennant type of pattern. And essentially it's just the stock taking a break, just taking a breather. It's almost like, and I use this all the time with my students, and I know it sounds a little goofy. I don't know if I've ever said it here, but if I sprinted up a hill and this was a hill and I sprinted as fast as I could, I'm going to have to catch my breath. And I know it's kind of a weird correlation, but in my mind, for some reason, it's weird and it works for me. If I see a stock move like this, it's probably going to take a breath before it keeps going. And that's essentially what this pattern is we've got a giant move, lots of momentum. The bulls are tired. They need a break. They catch their breath. And then once it breaks out to the upside, if it breaks out to the upside, then we're looking for a move further north. And typically, like a lot of patterns, we can get what's called a measured move or the expected move. Try to move this down here. Man, there's crazy tech issues going on. There we go. I think we got it. So if you measure from the start of the flagpole up to the very peak where it first stops, whatever that amount is typically about what you expect it to move if it breaks to the upside and goes north. And so what we're looking for on ABBV as far as a move, if it breaks up, is for it to run up to, the measured move takes it to 128. But as you know, I always put a trading plan on and look at what are the other potentials, and do I really want to get that greedy and look for a hold $9? If it runs up to 125, I'd start scaling out of my position. But if it breaks above this line, I would get into some. Oops. I get into a small position right there about 118.18 if it breaks up. And then if it continues, I'd look at adding to it right there about 119. And the only thing that makes me nervous about this is the fact that we've got a pretty significant resistance right there. So identify the pattern, draw it, analyze it, create the plan, and then just be careful and watch out for this point. But if it does break out of that, then it's probably going to continue north quite a ways.
All right, so scaling into position, scaling out if it got to 125. So
Yeah.
All right. Let's do a couple more from your list, and then we have some tickers from the chat.
You got it.
So let's see what else you're watching.
Well, Baker's one. This one already broke. This is one I looked at in the pattern of the week right there. That vertical line is when we looked at it, and then it broke down, and it's down. I don't know. It's down $1 or $1.50 today. Yeah, it's down $1.29 right now. So this is one that's already gone, though. I was thinking that it wasn't. I'm trying to find ones that. And Beaky, this one gapped up this morning too. There was one or two on this list. Yeah, I think it was BSX. That I want to show you something. We're going to look at something that may still have the potential to move. There it is right there. So this is one that even though a descending triangle, which we have lower descending tops and then basically a flat bottom, a support level that's flat, which typically is a continuation pattern when stocks are already trending lower. In this case, we've actually got a little bit of an uptrend and it's moving lower or moving sideways for the most part for the last few months. And even though it's not textbook perfect, it's still legitimate there. So basically what I've got is a trading plan in place where I've got the stop. Is that even right? That looks a little high. 41.63. Okay, I didn't, let me get that back. That was a little bit off.
Martin Carlisle is in the wrong chat, everyone.
So there's the stop and then the entry point. The target I got at 37.8, 38. And it, with a spot here about 39.40 to watch for. So you want to hop to the chat and see what we got there? I see there's a whole bunch of tickers in there.
Yeah, there's a lot of tickers, Tony.
Yeah, I see that.
I'm going to go to the top, and we're going to work our way down.
All right, fire away.
Can you look at the trade desk? This is relevant for our next guest, actually. The trade desk is in the same business. So let's look at TTD.
TTD.
Talking programmatic advertising.
Well, busted out to an all-time high. There's another, I mean, there's a start of a flag at least, or a pennant. And we had one basically here back in, what's that, the beginning of November. Big old bolt that only slowed down for a couple of minutes, but then took off to the upside. As far as trading with a pattern goes, I mean, obviously it's run high, obviously earnings. I would look for a flag or pennant. If this thing settles in here for the next few days and gives us that type of pattern, the sideways move like this, and then it breaks north, then I'd get bullish on it. I wouldn't trade it right here. It's a little too far. I think the odds of it dropping back and pulling back are too high. And I trade for the most part off of odds and probability. So whenever I look at a stock and analyze it, first I'm looking for a pattern. Then I'm like, what are the odds of it continuing to run like this? Unless there's some kind of news or catalyst to keep it going, which this one sounds like there is. What do these guys do again?
They are like the advertising pipes for like getting ads onto platforms like Roku.
Ah, okay.
And the computer. It's programmatic advertising. We'll talk about it more with our next guest here, but
yeah,
that's where it is.
Okay. Yeah, and chart wise, I mean, technical analysis wise, that's all I see. I don't see anything tradable yet. We'll have to see how it plays out the next few days.
Okay, a couple of different people asked about Roku. Someone asked, Double Trouble asked if Roku is it going to be a negative year? I'm assuming he's referring to 2021, not 2022. Double Trouble, yeah, it's going to be a negative 2021 for Roku. Stock opened the year at like 330 something, and we're at $100 away from that. So
yeah,
I mean, I don't know the future, but I feel pretty confident that Roku ain't going up $100 in the next month and a half.
Definitely not a pretty chart if you're bullish.
I see a giant W. I don't know what that means.
Giant W?
Yeah.
Where at? Over here?
Just on the daily, just like way to the left, like that huge clip.
Oh, right here?
Yeah.
Yeah. Yeah. That's well, which obviously you can see made a nice catalyst for that bullish trade. So if we got another one of these here, or at any point with Roku, then I get bullish as far as trading this thing to the bullish side. I mean, it's what's the old saying? Don't catch a falling piano or a falling knife.
That works. That works.
So yeah, this one is it looks like based on what I'm seeing, we're probably headed to 171. There's not much to stop it. The volume's big. Well, there's not a whole lot of support in here to catch it. I mean, maybe 200. There's a little bit of support there about 200, but it's not very significant. The next major level of support is 171 right there, 170. So hard to say. I mean, but this is not something I would trade bullish. I'd maybe even a bearish trade I wouldn't take yet because it's dropped too much for me then. I want to get in. I want to look for something where it's consolidating before it makes its next move. So
Nasen 200 is asking about Tesla. Is Tesla going to break out? I mean, Tesla just did break out. This is
yeah.
what we talked about. Breakout, flagpole consolidation.
Yeah.
What else do you want?
Everything. Well, and here's another example. I mean, a descending triangle. Here's an example of an ascending triangle. We were looking at Tesla back here with that ascending triangle, and you can see the result of that's the beauty of patterns. Is you get a nice little pattern, it breaks out, and this is the kind of launch you can get. These don't happen very often, but they're fun when you catch them. So, but as far as seeing anything in Tesla right now, I would venture to say this is probably just going to go sideways for a while. Maybe catch some, short-term swings, but I wouldn't. There's nothing, and being a patterns guy, and like you've said before, to what I do, because over 20 plus years, I've learned the hard way that when you don't, you get in trouble. So I don't see much as far as trading opportunity for Tesla at this point, but that can all change in a day. So.
Okay, let's find, there's a bunch here that are in like huge trends. Let's look at Moderna. That stock has gotten so punished, and is it still blasting off today? Yeah, 5%. Wow. Okay.
Is it up a bunch right now?
Is it still going higher? I haven't checked. It's not big in the pre-market.
Yeah, it opened up about 9% and then moved lower, down up only 3%. It's now moving back higher, up 5% right now.
Yeah. I don't see, as far as patterns go, again, that's looking for something where I'm always looking for a trading opportunity of something that is obvious that says now's the time to get in.
Nothing there.
Nothing.
Fair enough.
There's a hammer pattern, candlestick pattern 2 weeks ago, but other than that, it might fill the gap. That's another technical analysis tool that we use, is the gaps are there, and a lot of gaps will fill. They don't always, as you can tell, there's one back here that hasn't filled. So there's a possibility to trade the gap, but hard to say.
What about Boeing?
Boeing, that's one that's been on the radar for the last few weeks.
Boeing has patterns. Boeing always has patterns.
Yeah, we had a nice triangle going on, but I'm going to get rid of that because it's no longer there. Move these out of the way real quick. Well, it's broken the downtrend that was there. There's a nice little roll reversal. So we've got a solid downtrend in place. It breaks out just a few days ago and came back and it's kissed this line. So this 225 area should act as support at this moment. So, and actually it looks like it's interesting with the markets, the overall markets, the Dow and the Russell both had nice pullbacks and are bouncing at their previous supports right now. But the SPX and the NASDAQ have just kept running. They just had a 2-day pullback. Hold on, Brenda.
It's because of Apple. I promise you, it's because of Apple.
I know I watch Apple once in a while, but I don't necessarily keep it on the radar. It's taken off. Yeah.
Ridiculous.
I know people think that's crazy. People are like, why don't you watch Apple? Why don't you watch all these big names that everybody else watches? Well, like I said, I watch for patterns. So, but Boeing at this point looks, I like the looks of it as long as it stays above that level. If it doesn't break that.
All right, we're getting asked about Digital Turbine, ticker APPS. What lost track of this one? Where is it at? $61. Wow. That's actually higher than I would have thought, I'll be honest with you guys.
Whew. Yeah, where to go with that thing? There's a little support there right about 60 basically. So if it holds that level and bounces, but this is where another one is, it's obviously dropped a bunch, but if it digs in and holds here like it has before, then I'd be bullish on it. If not, then I know it sounds so obvious.
We're on a daily, right?
Yeah.
Dippy Puff wants to know about the weekly. If you see a reverse head and shoulders there.
On a weekly, inverted head and shoulders. If he's talking about right here, yeah. That is, yes, an inverted head and shoulders right there. And this is exactly why I use patterns. And I know I keep saying that, but this is the beauty of them. We don't always get them too much to see them here, but there's the expected move. And obviously you can see it went past that. So easier to see on a line chart, but yeah, the inverted head and shoulders this is why I love head and shoulders. And if you flip it over, same thing. So there's a potential trade that you could have taken, seeing the pattern. But there's the woulda, coulda, shoulda. That is messes with your mind. So it's too late to get behind that. That's where the patterns in the flash came from. Is I'd see those 6 months ago. I'd see them back here and get frustrated because what do you do with this now? Right? You can't trade it now. It's too late. So, but as far as currently, there's not much to do with this. So what else we got? What else are we looking at? What's that?
Let's look at Marriott. Let's look at MAR. Hotel, motel, Holiday Inn. What do we got?
Yeah, I was interested in Macy's. Macy's was taking off, and so a lot of the other retailers were not. No, the cruises were looking bullish there for a bit, and then they dropped off. So the whole travel industry. So we're in the beginnings of, and it's the very, I mean, we got a left shoulder and a head. We don't have a right shoulder yet, but we do have that support level right there at 153. And then yesterday, or day before yesterday, I guess, because yeah, this is yesterday's data. It's not updated today. It's not a live chart, obviously. But when you're doing patterns, I mean, it's not necessarily important. Bullish engulfing pattern yesterday, holding this 153 level. So we could have a run to the upside, which is what I would look for. Is it tradable? Maybe. Depends on how much risk you want to take. As far as putting a trading plan on place. If we got a couple minutes to do that.
Yeah.
Throw some numbers in it.
So Tony, do you just have a watch list of different stocks that you might see some patterns forming on that you kind of cycle through, or how do you what's your process of finding stocks to analyze for patterns?
Love the question. That's what I show all my students. So it's nothing more than going through the list. I've got, you can see I've got a swing trade list here. And this is, I mean, obviously this is software I use that makes it very easy. Like I said, I've used it for 20 years. But I just literally will flip through and look for, and a lot of times I'll do it, especially it's a lot easier on line charts, but I'll literally just flip through and I know right now there's 241 symbols on this filter, but I literally just flip through like this and look for a pattern on the right-hand side. And if I see it, I flag it. I can hit the space bar, it puts a little check mark in the box. And then I go save it to another watch list. And then I go through those and I'll analyze them in a little deeper, get a little deeper with it. So like that, I'll do it real quick. So I'll flag it. Nothing here. I'll just do a few. And then I just, I'm trying not to go the long route, but it's kind of hard. I create a new gribble. I'll just name it, whatever I name it. And then I can come into it and I'll analyze it deeper. So basically I'm just filtering it down. This is a filter that has all I don't know where that went, but so the filter has just basic criteria, price and volume essentially. So I look visually to see what patterns there are, filter it down to a smaller list, and then go there and find the best of the best. Basically looking for the cream of the crop, if you will.
Got it. Yeah,
does that make sense?
I was just curious about, because you mentioned how sometimes some of the bigger stocks you aren't watching, whether it's Apple, Tesla, et cetera. So I was just curious, how you manage your watch list.
Yeah, and it's a different way of doing it than a lot of people do. Most people do just keep a group of stocks they watch. So it's not, I don't know what the right word is, popular or trendy. It's not the way most people do it, but that's the beauty of this business. You can do it any way you want. This is something that I've just done for years and it works for me. So I figure if it ain't broke, don't fix it.
Let's do a couple more and then we got to hop off.
Okay.
See people asking about Chipotle, CMG. How is CMG? I'm looking. I'm gonna guess. I've not looked at the chart in a while. I'm gonna guess Chipotle's at
Yeah, me neither.
1,300. No, not even close.
17. Yeah, I haven't seen this for a while either. Well, it's starting to look bearish. Yeah. Well, yeah, because lower highs, lower lows is how you define a trend, right? Higher highs, higher lows is an uptrend. Lower highs, lower lows. So we've got higher highs here, and now we've got lower highs. Well, we're kind of in the middle of nowhere right now because we've got a new high. The new high just a few days ago breached the previous high here. So we've got a higher high, and we're basically just in la la land, if you will. So I'd look for a breakout. Either it breaks this high, the most recent high, they're at 1861, or a break of 1750. I'd get bearish down to about 1550, because obviously there's this gap that hasn't been filled. So that's probably going to fill. So that's nice. I mean, it's a $200 drop if it does. If it breaks above 1860, then you've got the obvious headwind there about 1925. So there's not a whole lot of upside potential if it breaks north. The only way I'd really get bullish on this, if it comes and holds this 1750 line, and it gives some kind of indication, maybe a bullish engulfing pattern, some type of indication that it's going to run back up to this 1860, because it wouldn't be a surprise to see this thing just channel between these 2 points. But typically, I'm not necessarily playing inside the channel. Usually I'm waiting for it to break out, because that's usually where the quick moves are at when it breaks out.
Got it.
So that's ideally what I would do here. So
There's some questions from the chat about this. Like, if you're looking at the longer term trend, I guess you have longer term trends. Focus on the last few months.
yeah, we could do that. I mean, you can come in and draw lines. And one thing I learned years ago is not to put too many lines on the chart. And that is super steep, which is not typical and usually not sustainable long term. That would be more of a long term right there. Whoops. Of course, you can always use the moving averages too. The 200-day moving averages right here. That shorter term.
I like that. I like using the 50 and the 200 day, just as a general ballparker. You know what I mean?
Yeah. And it's good to look at the specific stock and see if it uses it. And here if you look at CMG back in the middle of the chart, it used it as support quite a bit, and then it stopped using it, but it uses it quite a bit. And sometimes it just gets wild and crazy and doesn't. But it looks like it came down to about the 200 here and used it as support. It was a little bit below it, but then finally went above. So, and now it's using the 50-day as resistance. The last couple of months it has, at least. It's been bumping its head up against there and falling. So if it breaks down here, I would expect it to dig in at the 200-day moving average, not only because of the 200-day moving average, but also that trend line, which is there. It's not quite as steep when you go to a daily chart. So it doesn't look as crazy, but so the 1550 might be a little aggressive, but that 1625 area, should it break south, break that 1750, I put a target about 1650, 1625.
Awesome. We got time for one more.
All right.
One more, guys. Let's do, fine. You want to do, a few people asked about GameStop. Is there anything in GameStop?
I saw that in the chat.
Just bunching up.
Yeah. This is a massive symmetrical triangle, kind of. It's way too big for reality, but yeah. I think the thing that I question about this, and I'm not a fundamental guy, I'm purely technical, but I mean, can this business actually support this fundamentally? I mean, is it worth $200, which I don't care. As a trader, I could care less. But there's another ascending triangle. I mean, we've got these, it's digging in, it's hitting its head about 220, and the lows are getting a little bit higher. So you got a little sloping uptrend. So if it breaks out of that, there's room to about 283. There's not much resistance to stop it from there. So if it breaks north of 220, there's a possibility of it running to 283.
All right.
But that's a big if right now. What's that?
Big if, plenty of ifs.
Yeah.
283, the next level in GameStop. Tony, thank you for joining us. As always, exciting to go through some patterns with you. Let us know next time we get on. Hopefully we'll have some new stocks added to the watch list. But yeah, have a great weekend.
Awesome. Thank you. Appreciate it, guys.
All right, patterns in the flash. The link is in the description, guys. Check it out. Thanks a lot, Tony. Oh, and happy Thanksgiving, by the way.
Yeah, you too.
Happy Thanksgiving, because
Yep.
it's next week, man. Next week.
All right. Can y'all hear me now? Hopefully you're all back. Let me get this. I think we should be able to get this back. Okay, good. Good. Did I? Who's call saying it's the operator? Oh, that's you, Brenda. Okay. Now my video camera's back up and now we're back live here. Awesome. 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 I would love to have some feedback if y'all got some how that went, because we haven't done that before. That was a first, as far as I know. And I don't know if it's going to happen again. It was just a coincidence that they needed to shift times and it was right in the middle of this class. So, as far as how you saw, because I couldn't tell from my end exactly what you saw. So I know you can still see my screen, but so it was a very learning experience. Was it a good learning experience is the big question. Or was it chaotic and crazy? Was it hard to follow? That's really what I'm trying to figure out. I just want to make sure that if it ever happens again, if it was that bad, then we don't want to do it. So I guess let me ask you this. If that happens again just by coincidence, I don't think it will, but just in case it does, would y'all want to do it again? If you'd like to do that again and see that part, then give me a 1 or a yes. If you don't want to do that again, if it was too crazy and too chaotic, then let me know. So, okay. So most of you are saying, yeah, you'd like to do it again. Okay, good. No, that's good to hear. And again, like I said, it was a first. So, but not everybody. So you couldn't hear that. You couldn't hear the host, I'm assuming then. Oh, you mean the ticker symbol, which chart we're looking at? Okay. I appreciate the feedback, Dory. Yeah, any feedback you have, I'm wide open to it. So I get pretty thick skin. You get traded in the market and get kicked in the teeth by the stock market enough, then you get your emotions get kind of tough. So anyway, I appreciate the feedback though. Okay, awesome, Barry. Thank you. Yeah. Well, you can, yeah, I know it was pretty quiet from them. I tried to turn the volume up, but I didn't want to get too much feedback. So, but I've got my mic sitting right in front of me, right? So, and then the screen is, the volume's coming out. So if you stream it on YouTube, you can see it. So typically I'm on there every other Friday, and the last few weeks have been kind of shifting. They've been doing some different conferences. So, been kind of moving times around, but typically I'm on every other Friday there at 1 o'clock Eastern time. So, I was supposed to be on 1 o'clock today. I was going to finish up here, then go join them. But well, whether good or bad, y'all got to see that. So you saw something new today. So let's go look at. Actually, let's go finish the PowerPoint real quick, and then I see, was it DocuSign you want to look at, Raj? Raj wants to look at DocuSign. So we'll finish this up real quick, and I'll just finish off the risk reward part. Y'all see this now. And so just so you understand, in case there's the question, because I know this came up right before I was going and it was getting kind of chaotic there. So that 20.5% is 2 winning trades divided by 7 total trades. So the number of trades that were profitable percentage wise were 28.5. So what does this do for you? If you have the odds on your side and you use risk reward, it is a massive benefit from a mental perspective. And if you haven't experienced this, then go try it. If you're not utilizing risk reward like you see it here, like a 3-to-1 or even a 4-to-1, then start doing it on some of your trades, because that's what I did when I learned 3-to-1 risk reward early on. I knew what it was conceptually. I just didn't know how to use it, and I never had seen how to use it. Nobody showed me how to use it like you're seeing now. And what happened is when I realized that how big of a deal this really could be, I started using it on some of my trades. And then my other trades, I wasn't using it. And what I discovered, I woke up one day and had this massive, like, okay, wait a minute. These trades over here that I put the trading plan on, that I have a risk reward of 3-to-1, I'm not worried about them. I was very calm and relaxed because all of a sudden my mind shifted to where I don't have to be right that often. I think I put on 2 or 3 or 4 trades. I think I had 4 if I remember right. And I remember thinking, you know what? If just one of those goes in my favor, I'm basically break even. And obviously there's the variance in how much, you might do it, one's a $20 stock and you have 50 cents of risk, and one's a $120 stock and you've got $1.50 of risk. So, but over the long term, the numbers all work out, right? So I'm looking at it going, if just one of those go in my direction, then I'm okay. And I remember thinking there was one that was a higher price stock that I had more risk, but more profit potential. But if that one goes my way, the other three lose, these are little ones, I'll still be way ahead. And I just really, I wasn't concerned about them. I'm just like, just let them play out. I just literally was chill. It was like, I'm not worried. You know, some of you sit behind your computer, you're watching it, you're bringing it up on your app at work every 5 minutes, and you're nervous about it, right? When you implement this and you just put the plan in place and let it work, all of a sudden you'll start to realize that you're not as nervous and freaked out. You'll still have the emotions. They're still there, but it makes it a lot easier to control it and you're a lot less fearful, right? So it helps reduce the anxiety because you know that the odds are on your side. If you place 4 trades, if 2 of them go in your favor, you're probably going to come out profitable, right? You need to limit the feeling that you're missing something. And that's one of the things that allows you to do this. It just helps you to settle down and relax. So try it. If you haven't experienced it, if you haven't done it, try it. That's what I did. And that's when my eyes got wide open. And that's really when things started to shift for me from managing your emotions from that standpoint. That's when I went from, nervous, and I wasn't like crazy nervous like I was when I first started, but it made a dramatic difference. It's noticeable. Let's put it hugely noticeable. Okay. Thank you for that feedback, Helen. I appreciate it. I do. It was, like I said, it was kind of a weird deal. I hadn't done them before, but now we know. So we got some good, some bad. DocuSign, though, we'll look at that. And if anybody else wants to take a look at some different symbols, start throwing them in there. Yes. Thank you, Brenda. I noticed you saw that. I tried to let you know real quick. It's hard to have a conversation with 2 groups of people. You're over here and over here. And it was weird for me too. Definitely weird because I felt bad because I felt like I was ignoring you guys, but at the same time, so anyway, we know now. So DocuSign, and if you're not familiar with me, then at least you saw the process of how I find trades, right? I don't like that one. Oh, you want me to intraday update? I gotta do an intraday update for that. I don't know if it will go quick enough. It might. Let's see if we can get it to go fast enough. No, I don't care about criteria, actually. It might go fast. Usually I do that right after the market closes with criteria, so I can look through my watch list, but we'll do it without the watch list. Hopefully it doesn't interrupt too much. Whoops. I thought, you know what, honestly, I just realized a little short time ago that Omega Charts was doing that where we could do an intraday update. Because I know a year or 2 ago, they took that feature away for some reason, something to do with data issues or something. It wasn't data issues. There was licensing issues with data or something like that. I could have sworn they got rid of the intraday update. So I wasn't utilizing that. So I don't know if it's, where is it? It hasn't updated. Oh yeah, there you go. You just updated. Okay. Well, yeah, honestly, it's only been a few weeks since I realized that feature was put back in here, that it was reactive because I was told it wasn't. So, I mean, we can go overlook it at TOS. I mean, TOS is live and in person, but so we got a symmetrical triangle on DocuSign. Other than that, I mean, and there's obviously it looks like a pretty solid spot there with that line at what's that, 266. So as long as it stays above there, if it breaks north of this downtrend line, then I'd be interested in it. It's back. It's kind of fighting the 50-day right now. It hasn't really used it the last few weeks. It hasn't used it historically, though, as support or resistance. Whoops. Not really. It doesn't recognize the 50-day too well. So I wouldn't put a lot of stock in that. Excuse me. Yeah, I mean, I like the pattern's nice. The symmetrical triangle is nice. Oh, they're coming out with earnings, though, on the 2nd. That's only 2 or 3 weeks away. So, and we'll go. Let me know if it's. Amy, you can yell at me if we go a few minutes late to make up for some of that we had on Benzinga. If that's okay. If it's not okay, one of the administrators let me know and yell at me. I don't want to get in trouble. Yeah, the Qs, I mean, is kind of doing the same thing. The NASDAQ's breaking out. And as we saw Apple, I haven't seen Apple for a while. Yeah. Okay. There you go. There's the reason the NASDAQ's taken off, because Apple's a huge part of it. There must be some kind of news, because earnings was a couple weeks ago. Must be some kind of news on Apple that's catapulted them higher. Or is it just, this was weird. I mean, you'd think with the economic data that's coming out, and realistically, the economy is slowing. There's lots of data showing that the economy is slowing. And if inflation continues to run, it's going to get worse. It's going to slow down even more. And at some point, the Feds will have to raise interest rates. So we'll see. I mean, it's always hard to tell, right? You never know. But right now, the market's still raging north. So, and there's nothing really stopping it right now. So, did it really? Yeah, well, it's got to get all the way through. So, it'd be interesting to see how that affects the market. Brent said the Build Back Better, or whatever name you attach to it, passed the House. Yeah, it's got to get through the Senate, which I don't know that will make it, but we'll see. And it'll be interesting to see what happens. I mean, how that affects the market if it does get passed. So, not to get into politics, but I personally don't think it would be a good thing. But for certain sectors, it'll be good. But I think overall, there's too much debt. They're going to have to print money, which will create more inflation. You spend a boatload of money, then you got to pay it back at some point. And if you print a bunch of money, and that's part of the reason we have so much inflation, is because they printed so much money. I ran into a friend I haven't seen in a decade, a guy I worked with years and years ago. And it was interesting because he said he's got a friend she's a teller at a bank or something like that. She said, I'm probably not supposed to say this, but there's people that, I mean, in the last year, they dumped 1.9 trillion for the whole COVID relief package. She said, there's 10 or 15 people that I know personally that bank there, that she knows, not personally, but they're customers of a bank. And she said every single month they were on the verge of overdraft and overdrafting, frequently. And now 10 or 15 of them have 10, 15, 20 grand sitting in the bank. They got all this COVID relief money. They don't have to go back to work, and they're milking it as long as they can. I mean, if you're used to having no money in the bank and now you've got 10 or 15 grand, why go back to work? I mean, that's the story I've heard. That's what he's telling me. And I've heard that from other people too. So, if you got a bunch of free money and now you got a bunch of money sitting there and you're not used to having it, you're spending it, right? You're buying stuff. So it's more and more dollars chasing fewer and fewer goods. And then you got the supply chain issue, which creates more inflation because, I mean, you saw lumber prices. So, I mean, that was crazy. Even my dad, he's a forester, right? And he's owned timberland for 30 years now. And he said, I've never heard somebody ask me about lumber prices. He's done timber his whole life. And all of a sudden, people are asking him all kinds of questions about it. And it was, one of my best friends they build log truck trailers, and they have a company, they haul log trucks. They got 40 or 50 trucks on the road all day filled with logs. And I called him one day, and we're both busy. We got kids, and he's running his business, I'm running mine. And he said, it's purely manufactured. He goes, we're hauling record number of logs. They had every single truck on the road maxed out, hauling all day as much as they possibly could. He said, we're maxed out. We're hitting record numbers as far as number of logs hauled. It's a completely manufactured crisis. Because there was, I think it was Northern California. I know Oregon had a ton of wildfires last year. And a lot of it was that, right? Once the outside of the log burns, you can still use it. So they go harvest all the burned logs because they're not going to keep growing. And that's what they're hauling. There's more than enough supply of wood. So why did lumber go up 3, 4, 5 times? It's just kind of crazy. It certainly appears to be a man-made manufactured deal. So I don't know, I'm a little off the reservation, but any other charts you want to look at? We're going to go a few minutes late since we took the time to do that and test drive that. There are some here that we'll look at. ABBV, we already saw. ATUS. Beaky, this is one we've watched. I don't know, is Will here? I didn't see him, but I know Will jumped on this. This was one of the pattern of the week back here before it broke above that orange line. And he jumped on it before that and had a nice little profit before it tanked off. But we've been watching it. We've been keeping an eye on it for it to break to the upside. And it's moving today. It actually opened right at the entry point. So if that one pulls back a little bit, in fact, where is the where'd my chart go? That's not what I wanted. It was really weird that thing just stopped working. I don't know what's going on there. Okay, I'm not going to worry about it. Whoops, not what I wanted. There's what we wanted. So BKR, this is one that we looked at. This was on the pattern of the week on that vertical line. If you're not familiar with patterns in Flash, I'll show you real quick where this was. If you haven't experienced this tool yet, if you're new, if you haven't been with me yet, this is all about charting. It's all technical analysis. There's flashcards. There's over 8 hours of videos here, on-demand videos. There's quizzes, bonus videos. There's a calculator. And the pattern of the week is something I do, and it's turned into patterns of the week. But this is one BKR you can see on the right side of your screen. Thank you, Amy. If you haven't taken advantage of it, there's a 2-week free trial. You can grab that link in the chat box and get 2 weeks to kick the tires on this. But that is 11/4. You see that vertical line. Here's the pattern of the week that I posted that day.
Hello again.
Oh, you can hear that, huh? BKR, there's where I looked at it. And then I think it was around. So yeah, there's the day. You can see that big shooting star. This is the day I highlighted this on the pattern of the week, looking for it to drop. This was the trading plan we put in place. Had it stop at 26.14, target of 1984, basically $20, looking for it to do what it did here. And over the last couple of weeks, it's dropped off. It triggered the entry point a couple of days later. It hasn't stopped out. If you waited for it to run back up, now it's even better. But obviously, it's taken off to the downside. So this is one that has worked out very, very well. BSX, this is one that we are in the process of. It hit the entry point this morning. I did not pull the trigger on it yet. Was kind of waiting to see what was going to happen because this has dropped a bunch. This is the only thing, and kind of like when we were talking about with Benson, the flags, right? They move so quick to the upside. And talking about odds, since we're talking about that today, right? That's probability. Stock from 45 to 40 is typically going to settle in a little bit. It doesn't usually just fall off a cliff. They do, but from an odds perspective, from a probability perspective, the odds of this thing continuing from 45 all the way to 37 is relatively small. I'd say less than 50-50. The odds are higher that this thing's going to settle in and dance a little bit. It'll probably retrace some, move back to the upside, or maybe even just sit and go sideways for a little bit. Ideally, I'd like to see it come back up and test this 4140 area and then kind of dance around it. But that is one of the reasons that I trade the way I do, because sometimes they do fall and you don't know, correct? You don't know when it's going to just fall off a cliff. So a lot of times what I'll do is pick up just one contract, maybe two, take just a small position, whatever that is for you. Take a small position when it hits like it did today. And then if it falls, then you're there, right? You don't have to worry about that fear. There's always that fear factor, the fear of missing out. And then when you get into a trade, there's the fear of losing. And there's that constant battle that just yanks you back and forth, right? Well, if you have the fear of missing out, if you're sitting here looking at this saying, I think it's going to continue to tank, but I'm scared that it's going to retrace back to the upside, then as far as I'm concerned, you have two choices at that point. If you're scared you're going to miss the move, then get into it, but do it very, very small. In other words, put the risk on the table, but don't make it so crazy that you've got so much of a risk at the table that you're freaking out. Put in the size of a trade that you can tolerate. Oh, I just saw your lily, Raj. Don't let me forget. Does that make sense? So I love the looks of this descending triangle type of pattern. The entry point is there. I've got two different entry points. The really aggressive pot is 41.13. 40.57 is the other entry point, and the target is 37.38. So I'll keep an eye on this today and see how else it plays out. Let me look at Lily. Raj just asked for Lily, so let's take a quick look at Lily. I haven't seen this for a while. Running up against the top there. I don't like that. I got to clean that up. Get rid of that stuff from way back there. There's the major points. Whoops, that's not what I wanted. That's not what I wanted either. Delete it. So yeah, not, I mean, as far as patterns go, there's not much here, except for we've got a double top. Actually, we just tagged it today. It looks like we've got a triple top type of pattern. So that 270 just hit it again and is acting as resistance. Thanks for bringing this up because I might want to look at this actually. So here, this is toss. This is Think or Swim. This is the live streaming platform I use. Okay, so it's about the same spot, 264.07. So we've challenged that 270 level again today. So it'll be interesting. We don't on a line chart, there's not a double top, but here there is. So if we treat this as a double top using that intraday move and that test of 270, which if this thing stays where it is today, if it stays black like this and closes, well, it's technically up for the day, right? Because it gapped up so much. I'm assuming there's some kind of news related to this. But if it continues to fall, we've got basically a double top there. And we've already got a solid resistance level here where I dropped from 270 all the way to 220. So if this 270 level holds and it continues to fall, then the odds are we're coming back down. But the question is, where do you get in? Where would you trade this thing if you were to get into the trade? That's where it gets tricky, right? Finding patterns is easy, especially if you go use the flashcards to train your eyes to see them. Recognizing them is a piece of cake. And then you go watch the videos, which helps you learn what to do with them, when to get in, when to get out, how to gauge the strength of it. Is it strong? Is it weak? But then the question becomes where to enter. So on this one, and this is just me, this is the way I trade, I would look for it to break. This is basically the midpoint. If we treat this as a double top, the midpoint is right here. So a break of the midpoint would confirm the bearish move. There you go, Rod. That's the answer to your question, Roz. No, this is a double top is bearish. Because what we've got here is you've got the resistance that it created at 270, came up and tested it again right here. Right? You can all see my mouse, I think, right? Put a vertical line. So it tested that 270 again and it fell from there. And over the last couple of weeks, it's effectively gone sideways. And just today we came up and tested it again. So the bulls are pushing it up here to 270, but when they get to 270, the bears come in and push them back. I mean, I don't know why sometimes I use visuals, but if you think of it as a tug of war, when the bulls are pulling the bears all the way up to 270. The bears don't want to go, but they're going. And the bulls pushed them up to 270, and the bears came back and said, no. So the bulls almost pulled them into the pit, but then the bears came back and pulled them back, and now they're back to basically even, right? However it works in your head, however you can make it work for you. I know sometimes I use these goofy analogies, but it works for me. So the bulls and bears are in a fight, and the bulls take it up to 270, but the bears come back and yank it back the other side. Now, the question is, when do we know if the bears won and pulled the bulls into the pit? That's where the midpoint comes in right here. So the middle point of the M, if you will, is when I would be looking for a bearish trade. That would be a confirmation of the pattern. Yes. So if it breaks north of 270, then yes, that would be a bullish breakout to the upside. But right now, I wouldn't expect that just because of what we're seeing at this moment. I mean, things can always change, obviously, right? You can see here where, we had a run up, we had one big down day, and then 3 days later, we're 250 to 270, 20 points in 3 days. Things can change on a dime. So what I'm doing is looking at the stock now and planning for what I see now, and then go from there. So right now, we're forming a double top. So if it breaks the midpoint, then it would be a bearish sign. What's the upside target? You guys are all about upside. I'm all about downside. Especially when I see something like this, because it looks, and here's the tricky part, especially right now, the market's a little crazier than normal. Man, you guys asked some good questions. We're going to be super late. I would say this range that we've had, which is about what it's done, whatever that is, that's about 40 points. If it breaks north of there, probably about 40 points, because that's the last three times, that's what it's done. But there's the thing is, when you look at this chart, I mean, this thing is just crazy. It's just 125 to 200 in a matter of a few weeks, pulls back, settles in, 175 to 270 in a matter of a few weeks. Now it pulls back a bunch to 230, launches back to 270. How far and how fast can this thing go? And again, Barry brings up a good point. I'm not a fundamentalist. I don't really care what the fundamentals are, but at some point things get so pricey and so out of whack from a PE perspective or any fundamental perspective. It's like GameStop. Like I said, at what point do you look at GameStop and go, a year and a half, 2 years ago, the thing was trading for $4. Its high was like $10 or $15, and now it's at 200. Is that stock really worth that fundamentally? And even though I don't look at fundamentals, I really don't care on a short-term basis. You got to look at it and go, is Lilly really worth 270? And maybe it is. PE now 40. Barry said PE's reported 40 on it. How do we find out what it was the last time it hit 270 in July? Lilly's never hit 270 unless even split adjusted, it hasn't. So this chart shows all the way back to 1980. We'll go back. That's 1970 basically. And even in 2008, there's the 2008 crash. And from there up until, I mean, we ran up to 75, and it looks like about 85 was about the high point in between 2014 and 2018. And the ultimate high back in 2000, which again was crazy, was 128. We're more than double that right now. Is Lilly, from a fundamental perspective, is Lilly really worth $270 a share? When you look at this chart, you go, historically, it doesn't look like there's anything to support it, but we are in a different market. But you know what? This market reminds me of the late 90s. Even though I wasn't trading then, I know a lot of people that were, and I've talked to a lot of people, a lot of traders that were there, and it's reminiscent of the same thing. And you got day traders coming in right and left. It's kind of pure insanity, but we're gonna have to wrap up. So let's do a trading plan on this real quick, and then we'll wrap up. So the upside target will be about 40 points if it breaks. I wouldn't be excited about it. Doesn't mean I wouldn't trade it, but considering there's so much move to the upside, if I did take a position on the upside, if it did break out, I would do a very, very small one. I wouldn't put a lot of risk out there. Now, if it breaks to the downside, if it breaks that midpoint, that's a different story. So there's where I would put the stop. And you can see I color code everything. Oops. So the stop is red. This is where I bust out my calculator. Risk reward calculator. So you all saw risk reward today. This calculator does it for you. You just put in the stop right there, and we'll put the target. I'll put it right about 230, 231, I guess. We'll go short of the stop there. I'm going to put it right at 231. And if this thing drops like this, I'd be scaling out of it. So then I put the target in there, and that gives me an entry point of 252.04. So you can see here, you've got $7 of risk, $21 of upside, $21 of potential profit, $7 of potential risk, 3-to-1, right? So now we'll pop that line on here, and this gives us an entry point. That is if it breaks the midpoint. And then here's the tricky part. With some of these higher flying stocks, that's a little ways below that. So what I do on these is I will create another entry point, a very aggressive entry point, like here, say, okay, there's the lows of the midpoint. If it hits there, I want to jump the gun a little bit and put just one, maybe two contracts in. So I'll make it dashed on. I do this so that when I come back to it, because when you analyze as many charts as I do and look at so many, you want to have something that when you come back, you can say, okay, that's what I was thinking. So double top, midpoint. If it breaks the midpoint, I'd pick up a small position here about 255, put a contingent order out. If it hits 255, go pick me up 1 or 2 or 3 contracts of whatever option I choose. And then I put a hook down here at 252. If it continues to fall, go buy me 5 or 10 more. And then if it continues to fall, then I would scale out of the position as it drops, depending on what it looks like, whether it's strong, weak. If it falls with a lot of momentum, if it drops like this, on a day like that, I'm taking out a big portion of my position. Because if it's down there, that's 240. If it's dropped 12, 13 points, I've got a healthy profit at that point. And I'm going to take out a big portion of mine because it's not uncommon after a big drop like that for it to bounce. Or like this, if you go back here, you see this one where it dropped off some, boom, the next day it gapped up. So I don't want to get stuck with that. So if a big drop happens like this, I'm taking part of my profit, if not a big portion of it, because there's not a whole lot of room left to gain anyway, right? I mean, how much more are you going to make if it continues to fall? But you leave some on the table, scale out of it so that if it does keep going, then you get extra profit. That's just gravy, pun intended. And does that make sense? So if you haven't experienced patterns in a flash yet, I would suggest go get the trial. Again, I think Amy dropped it in there. Thank you. It's in the chat box there. Sure, she just threw it in there again. So you got 2 free weeks to try to kick it around. Like I said in the videos, and this is if you're newer to technical analysis, if you're just learning, there's basics of trends. This is all the foundational stuff, basics of candlesticks. And then every single pattern, there's about 30 or 35 patterns in here where you can go in and look at and go in depth into the patterns, double top, double bottom, head and shoulders, all the patterns. So you can learn what to look for, what to look out for. Is it a good pattern? Is it, what do we look for in that specific pattern? And then there's all the videos are archived. Well, there's the last 6 looks like. So twice a month, we do a live 1-hour class for patterns and flash subscribers. So if you have patterns in a flash, then twice a month, we have a 1-hour class. It's typically Wednesday nights at 8 o'clock Eastern time. They do vary a little bit, but most of the time that's when we have them. And then they're recorded in here. So if you can't make that time frame, you can come back and watch the live class. There's quizzes. And this is what I tell people. If you haven't used this tool, if you're new to technical analysis, even if you're not, come in here and take the quizzes. There's 4 different quizzes. Take the quizzes and find out where you're at. If you bomb them, you probably need patterns in flash. If you pass them, maybe you don't, but it's not going to hurt. And actually, when you see the price of it, it's mind-bogglingly inexpensive. When you got 8 hours of video, 2 hours of live instruction every month, and then you've got, of course, the pattern of the week, which the last few months I've been 2, if not 3. There's another one in here. I think it was the 11th we just did that is also playing out. I know Will's not here, but which one was it? I'll show it real quick just so you can see which one was it? Not NEM, not BSX, BCAR, the ABBV. I swear there was one more here. Let me just, well, that's one that did. RRC, that's it. I know we just did Wednesday night, did a class, and Will was loving this. Will said, yeah, he got into RRC. Practice trade, of course, that's all we talk about in live classes because of regulatory junk. We have to talk about practice trades. But this is another, that vertical line is where we highlighted it as a head and shoulders. There's a head and shoulders, and this thing is playing out beautifully right now. It almost hit the target today, actually. So there's probably some more downside on this. So that's what you will get. You will see these types of trading candidates, the possibilities and the potential trades when you subscribe to Patterns in Flash. So go check that out and kick it around. And then we'll see you. I didn't miss any quick questions. I appreciate y'all hanging out and going through the learning pains of doing the Benzinga stuff. So appreciate you hanging out with that and having some fun. So any other real quick questions before we sign off? Actually, I just realized that I forgot this is going to be recorded and it's on YouTube. So if y'all want to go back and watch this on YouTube, you can. I'm going to go back and watch it myself because then I can see your perspective, how you guys saw it and how the whole Benzinga thing worked. So I just realized that. So anyway, so if you want to go watch it on YouTube again, have at it. So anyway, all right. Thank you. Appreciate you guys all coming and hanging out and going through the bumps. So y'all have a wonderful day. Have a happy Thanksgiving. Hopefully you're all with family and friends and whatever it is you do, be blessed. God bless you all. Take care. Bye-bye.